Hello, everyone, and welcome to the Hardcore Finance Show with Shimon and Alex. Shimon is feeling very sky high today. He has beautiful moons behind him in his office over there. Is that what it is?
It's Bitcoin to the moon, but different stages.
The rising moon, the full moon, and no waning moons. Your head covers the waning moon just perfectly. Bitcoin does not wane.
Yep. How
I
have you
was
been?
I was going to ask you the same thing. It's been a little bit since we talked. I've been good. I've been good. I had a nice little barbecue over the weekend. I think you came. Do you remember coming to my barbecue?
I do remember. It was great.
Good, good. Yeah, we had some. I remember listening to the All In podcast. You know how they always talk about the wine they drink, like, oh, this is $300. I'm my private chef. I'm the private chef. Our wine is $20 a bottle, and that's a high end wine.
I have to say though, we have upped the meat game recently by getting really, really good meat.
We have. This butcher shop was money. I love teriyaki, so I did teriyaki, one half teriyaki, one half what salt, and yeah, the meat game is pretty like it's pretty critical. I'm gonna go outside. We got feedback, by the way. Remember our walking
Hmm.
episode? We got really good feedback. People loved the fact that it was like changing it up and walking. So just change the scenery a little bit, move around. Let's not be so rigorous and professional, and we're having fun in this pod.
That's true. That's true. I would move outside, but I would be backlit because the sun is very strong where I am currently.
Poor you, Shimon. The problems that we all have. The sun is
That,
too strong.
well, that's the one advantage of leaving the Bay Area, which is like the weather when it's hot. It's so nice.
Yeah.
Think there's a hypothesis that people in the Bay Area never grow up emotionally because it's like always the same season, so you don't feel the time passing. So you have all these like 45-year-olds acting as if they're like 25-year-olds.
Young at heart, basically. San Francisco, where it's not the Burning Man or the drugs or the shit map or the homeless people. It's the weather.
I mean, it's a unique combination of all of the above. How about that?
The beautiful. It's like it's like
Remove
it's like a
one
recipe.
ingredient, and it would just not be the same.
The whole thing falls apart. It's not like what San Francisco and the homeless people. What is this place? Where are we? Is this Austin? Actually, Austin has homeless people too. Is this New York? Damn it. Um,
Yeah, by the way, speaking, it's so funny how this is like not political, just as a media stunt. What Ron DeSantis did was so hilarious to me, whether you agree with his policies or not. Do you know what he did, or do you want me to
oh
tell?
yeah, wait, no, I think you should catch everyone up.
So, we both Alex and I currently live in Washington, D.C., and people have been complaining that tons of basically DeSantis is taking people who come into the country illegally and just sends them to D.C. by giving them like bus tickets for free to D.C. And it's really funny because they're all outside of Kamala Harris, the vice president, outside of her house. And there's this
Wait,
really
I don't know about the DC. I knew about Martha's Vineyard.
So Martha's Vineyard is what I wanted to talk about. But before
Yeah,
that, so in
yeah.
DC, there was this guy interviewing the guy outside of Kamala Harris's house, and he's like, "Hey, did you come here illegally?" And he's like, "Yeah, I came here illegally." He's like, "Was it easy to cross the border?" He's like, "Yeah, it was very easy to cross the border." And it's like right outside of her house. And then, by the way, I really support immigration. I think immigration is great, and it's one of the things that makes this country like really, really good. Because like most countries, like in Europe, Russia, they have like negative growth in population. So like, I think it's one of the biggest assets, and I actually don't even care if it's legal or illegal because like, if you come here and find a job and you can pay your rent, like you're welcome as far as I'm concerned. Like, it should be like if you come here legally, you get benefits, and if you come here illegally, you don't get benefits, but you can still come, as far as I'm concerned. I know it's not a
Yeah.
traditional, but what's funny about Martha's Vineyard? So they sent like 50 people to Martha's Vineyard, just as a political stunt, and just like watching the reactions of people on Twitter was just hilarious. Like, anyway, you guys can just like Google it and see. But it's basically like only 50 people, and all these like gazillionaires in Martha's Vineyard didn't. They're like, oh no, we can't support this in our small little island, and so then they mobilized the whole National Guard and like deported them to a military base of Cape Cod. It's just like it's. I just wish that our government would be competent and good and just say, look, this is the policy and this is what we're doing. But all this like political back and forth, it just sounds like really not serious to me. Just like the Fed, by the way, it's like, I wish they could just say, look, this is our policy, we're sticking to it, and we're credible. Instead of like all of my financial crypto Twitter now, it's all about like, ooh, is the Fed going to pivot? Is the Fed not going to pivot? Is it going to pivot? When is it going to pivot? It's going to pivot before the elections or after the elections. I'm like, why do politicians have so much like inconsistency, you know?
What, what do you mean? Because people are talking about when the pivot's coming? What does that do with politicians?
Like if only we had an algorithmic sort of money that does not change, like Bitcoin, we could just plan better. Because like all of these like, oh, is it going to pivot? Yes or no? Like, at least if they were credible and they would say, look, 2% inflation is our target. As long as we're above 2%, keep raising interest rates. As long as we're below 2%, we're not going to raise interest rates. And if you could really believe that, you could plan much better. But like nobody believes it. People are like, oh, they're going to raise now the target to like 4%. So that will, I don't know. What do you think about this whole Fed pivot situation?
I wish they could pivot. I wanted to pivot. I'm more nervous about it. I mean, we can talk about the elections. I am beginning to see that I want them to do the right thing. Like they printed too much money and they said inflation was transitory, which is clearly wrong. Why do they do it? Because Powell was getting confirmed in the Senate. And so he wanted to, I think, right? It's all conjecture. But he wanted to appeal to the left Democrats in order to, and be kind of dovish and print more money. As soon as he got confirmed or there was indication, they pivoted and they started quantitative tightening. Now they don't want to leave a legacy because for them it's a personal choice of like, hey, do I leave a legacy that I created, the worst inflation in the history of the United States, or do I err on killing inflation, right? Forget recession and others. But I wasn't the Fed chairman or the board that let inflation run away. They're gonna go crazy. They're gonna do 75. I don't think they'll do 100, but they'll definitely do 75 because the CPI numbers came in hot. The CPI is a backwards-looking indicator, not a forwards-looking indicator. Why is CPI hot? Rents lag 6 months or so. In terms of what's rolling over, they're starting to roll over now in terms of growth. But when oil rolled over, and so it's negative, right? Negative pull on the CPI. Rents are now starting to kick in. And they're a positive pull, and they're a sticky pull on the CPI. And so the CPI will continue to be somewhat high, even though the underlying economy is fractured. And so what we see, we see a lot of the PMI, for example, manufacturing and indices. They're definitely in correction, bear market, and recession territory. So when the Fed is looking at least the metrics they're citing, they also cite the PC deflator. But they're citing metrics that are quite lagging, and so I'm worried that they'll keep on being hawkish because it's just like it's CYA. It's why do you go? Why does one kiss their boss's ass, their boss's butt? Because it's you don't want to lose your job. Powell and them, they want to lose their jobs, and they want to be known as people who killed inflation, even if. For the recession afterwards, no one's going to remember. They're going to remember high inflation and Powell killed it. Paul Volcker. Powell talks about Paul Volcker, hero of the American way and the Fed, destroyed the economy by killing inflation. That's really the only way, especially when a lot of it's supply driven.
But the problem is that with Paul Volcker, you didn't have these levels of debt. And I'm not even talking about like US debt. I'm talking about global debt. Because what happens is if you raise interest rates and the rest of the world doesn't raise interest rates, the currency here is going to become so strong that it's going to kill the exports. So it's really, really going to hurt, manufacturing and stuff. And so I just don't think like, I don't know. I was just listening to a podcast with Luke Groman, and it's like, it seems that like all the options are bad, but I'm willing to bet, this is my prediction, that they would rather leave inflation a little bit hot and not cause a recession. I don't know about
It already
timelines.
caused a recession. We're
Well,
already
no,
in a recession.
a much deeper recession. So what I wanted to hear, like, can I share a screen? Okay, so what I wanted to show is, this is the NASDAQ from 2007, right? So like, or even before, from 2003. But you can see that after the big global financial crisis in '08, it's a pretty steady trend. And so you clearly see that here in May 2020, we started to overheat way, way, way above the trend. And now we're back in the trend. So I think that like, if you just keep things as they are currently, it's not a recession. Like, I don't consider it a huge recession. I mean, yes, it is technically whatever 2 quarters of negative growth, but I don't think you can look at this fall here and say that it is like terrible in a recession. My point is, if they keep increasing interest rates, it can become much, much, much worse. So we can actually go below the trend line, just like we did in 2008. And I don't think, that's my prediction, I don't think they will go below this trend line for long. I mean, yes, here we went a little bit during March of 2020 when COVID hit. This, by the way, in 18 was when they started tightening the last time, and then they got spooked and they continued money printing. You know what
Yeah,
I
but
mean?
it got spooked because we didn't have as much debt. Yeah, so look, the stock market doesn't define a recession. A recession is the economy, right? The stock market is future expectations. Now, uh, so that's why I slightly disagree with you, but I will agree that there's a lot of talk out there that we're in a secular bull market and we have a bear, call it a correction, a cyclical bear market within a
Exactly.
secular bull
Yep.
market,
That's what
right?
I
And these secular bull markets last 15 years or so. So 2008 plus 15 is going to be 15 to 18 years. So we'll probably have, another few years ahead of us. 23, 24, 25, 26. And then somewhere towards the end of the 1920s, ironically, we did an episode on this called the Roaring Twenties way back.
before
What
COVID.
was it? Before COVID. We did this before COVID. Yeah. 2019 to 2020. One of our
Mm-hmm.
first episodes. We talked about this can be the Roaring Twenties. I hope that's right. I hope that's right. Although we have never seen, if you look at there's a great chart of the Fed funds rate, and it's like gradual down and hard down and then zero and then boom, the skyrocket up. We've never had an increase. And QT, so quantitative, tightening in the way we've had it now, ever.
Mm. Yeah.
So the Fed is really, it's like they broke it one way and now they're breaking it the other way, right? It's almost like, you know what it feels like? It feels like like if you're driving a car, like a bus, and you're going way too fast, and it starts leaning. And so what
Mm-hmm.
do? You overcorrect hard the other way, right? And then
Mm-hmm.
literally you see this in movies all the time. It's physics. It just starts wobbling, and by overcorrecting, you actually tip the car much more than not, and the
Wait,
car
it's
tips over and
physics?
breaks. How do
Okay.
they work?
Yeah, no, I completely agree, because like, the thing is, we've never seen anything like COVID before in terms of financially. So it's like all bets are off as far as I'm concerned. So like,
And,
yeah,
and
it's
people can't figure out what world to build for. People can't figure out what to do. Are we going to go back to pre-COVID? Zoom is a great example. Are we going to go back to post-COVID? Are people going to come back to the office? Are people going to do half and half? Is it going to be hybrid for how long? Inventory issues that we've had, Walmart, Target, and others. They bought the stuff that people needed pre-COVID, trying to sell it post-COVID. They can't. So I think there's a lot of uncertainty about what the new world looks like. What does the consumer want? What should you build? On top of it, add in insane easing, then insane tightening, and then a war, and then a threat of Taiwan, and then a geopolitics moving. This is really an attack of Russia plus China on the West, right? This is
yeah.
a fight for kind of the new world order. Yeah. So there's a lot. It's kind of like each one of these events isn't that big of a deal, even though each one is a very big deal. But together, it's almost like this insane black swan that's worse than 2008. It's a serious black swan,
But
you
I
know?
wouldn't say it's worse than 2008 because I think 2008 had a big structural problem in the financial system, which someone explained it to me like the financial system is like the blood of the economy. And so having a big structural problem in the financial system is like having like an autoimmune something in your blood, nothing else can function. Versus here, there's a bunch of things that I'm optimistic about that I want to I don't see enough people cover them. For example, what Putin with his gas, his cheap natural gas, what he did to Europe is almost like getting someone addicted to a drug that's not good, because like it was clear that he would use this leverage. I think we've mentioned this in previous episodes, but the whole Syrian civil war that Putin like was on one side of was to block a pipeline from the Middle East into Europe that can compete with Putin's energy. And so his whole thing, and by the way, this is one of the things that I really don't like about the Biden administration that thank God they just corrected, but they basically blocked the pipeline that was supposed to compete with Putin that goes through Israel and under the sea directly into Europe. Trump supported it, so they blocked it. I don't know if it was just like for spite or whatever, but now because of the war, they unblocked it. And now this can be developed. And also, people say, oh, it's going to be more expensive because we're going to kind of deglobalization. But I don't think on the
Nearshoring.
what?
It's called nearshoring, they're
Yeah,
calling it.
nearshoring. Basically, it was like, oh, all these cheap things in other countries, it makes everything better, right? It increases our profits, but it only increases the profits in the short term because then when people have leverage, they can use this leverage to extract more and more rents. So what Putin was doing with his energy allowed all the green parties in Europe to be against development of nuclear and other types of like energy that's actually sustainable. And I think energy is really the bedrock of everything else. Like everything is upstream of energy. Now the crazy thing is the difference between the stagflation we had in the 70s and now is that in the 70s the Middle East was the only big supplier of energy, and they boycotted the West because of Israel and its wars and whatever. So the crazy stagflation of the 70s wasn't just a financial phenomenon. It actually had something in the real world, oil, right, that became much more expensive. I think it went from like, $1 per gallon to, a lot more almost overnight. They literally had ads saying like lower your thermostat, it's better for your health or whatever. So now we don't have energy problems in the long term. We just have energy problems in the short term because people didn't develop these resources. Like the US, for example, Biden stopped all of these like developments in the or whatever. I don't know exactly. I'm not an energy expert, but I know that he definitely slowed down the production of energy in this country. And so now he has an impetus, right? Gas prices went up. So now suddenly he unblocked all of these things. So my point is that the terrible thing that Putin is doing is actually good for the long-term economy, even though it brings with it short-term pain. So I think we can grow out of this. And again, I'm not talking about the CPI or whatever. I'm talking about the real economy. Like we both agree that in order to get out of this huge debt crisis that we have, we just need to produce more things. That's like, no matter how you call it, no matter how you account for it, we just need to produce more things. Prices will go down when you produce more and more things. And so it's not easy to do it in the short term, but I'm optimistic in the long run.
So you brought up a bunch of different things there. Look, in the long term, we're good because as long as we don't hit ourselves in World War III, because people are going to get off of Russian gas, and we need to figure out how to dismantle, so to speak, Russia. Because Russia, we should talk about this actually in a second. We'll come back to it, but just like we did with Germany at the end of World War One, we can't let a country just sink into the swamp because then someone else is going to come back and come after us for it. So Russia's demographics, economics, the whole system is just, it's about to fall apart sooner rather than later, and this war is going to exacerbate. Let's come back to that in a second. There's another thing that Raoul Paul actually talks about a lot is major demographic shifts. And so in the 70s, there was a huge baby boomer population. So, 45, and in the 70s, you're in your prime, 30 years old, 35 years old. The baby boomers that came up, started getting money, and now they want to spend, right? 35 to 50 or so, this is the prime time of a person's professional career and so on. So you're coming into money. And so you have this huge demand push on top of everything to buy goods. We don't have that right now. We don't have this big bulge in the population coming through and rolling in. And so that's very, very different than what happened in the 70s. But before we go to Russia, we should, because there's an interesting, the Ukraine counteroffensive created an interesting dynamic between, basically created warlords. Maybe we do part 2 of this episode.
I would love
Russian
to hear your
warlords.
thoughts on that, because you're so much more, on top of the recent developments in that war.
Let's do that part 2. But what I wanted to bring up to attention is that in the macro, everything's fine, but people live day to day. People need to buy food day to day. We can't even wait 6 months. Even if for us, we're looking at our portfolios and the quality of life and ability to spend, when the numbers are, when the economy is suffering, and I forgot how many trillion were wiped out from consumer wealth from equities and real estate and so on. Trillions, tens of trillions, if I'm correct. That's tough. That's tough day to day, week to week. You're not thinking about what you're talking about is going to take 5 to 10 years.
Well, I mean, it's going to take 5 to 10 years, but the stock market is going to price it in sooner. So I'm not saying it's not tough for people. It's very tough for people, but I'm just thinking from an investor perspective.
Well, investor, what time horizon?
As far as I'm concerned, it's like infinite time horizon. This is another topic that we could no, seriously, we can talk about it on part 2. But like, what is the right time horizon? Because like one thing that I learned from the what just happened to us with the whole wipeout is like the value of cash. So if you have a certain percentage of the portfolio as cash, right, then it's like a buffer, and you can always, let's say it's 20% of your portfolio or 10% even of your portfolio is cash. So then when your stocks go up, when your crypto goes up, it gives you, you sell to rebalance. And then when stocks go down, suddenly cash becomes more than 10%, then you use that cash to buy stocks lower. So that actually helps you have an infinite time horizon, because that's something that's sustainable basically through ups and downs of the market. Now, the way we've been doing this, like leveraged without cash, then definitely it's much more sensitive to volatility. But at least what I'm planning to do is going forward, I am going to have 10% of my portfolio just as cash and just rebalance it once every quarter. Or once a year, if it's for capital gains. I still need to figure out the, maybe put it in an LLC, and then there's no long-term capital gains and stuff. But my point is, I'm starting to have cash from now on. It can really.
Oh yeah. How much are you gonna have?
I mean, I'm thinking 10 to 20%.
That's probably high overall, but I'm probably gonna be around 10. Because it really changed how we're thinking about it, right? Because before we would never leverage the Nasdaq, and this kind of taught us. But we also shouldn't overreact, because theoretically, by the time we're able to have cash in our portfolios, we're going to be going back up again, right? The time is to rebalance and take profits, which I have not been doing a good job of. But maybe we should. I think 10% is probably nice for me. It's probably a good allocation.
Yeah,
maybe 20.
We'll figure it out. I don't know exactly how much for now, but between 10 and 20, and I basically want to start thinking of very long time horizons, because like short term, I mean, if you need to sell stuff at the bottom, it's bad. But even if you don't have to, I always said I don't need to sell stuff at the bottom, because like I have income. But it's not just that. It's not just about buying and selling. It's about taking advantage of good market conditions, both on the upside and on the downside. That's what cash allows you to do.
Yeah.
So even if you don't need the money, even if it's money you're not going to touch, it still makes sense to have cash in there.
Cash. On this note, I think we should wrap up this one and then do part 2 about Russia, Ukraine.
See you guys next week about Russia, Ukraine, and also about some very interesting technology things that I've been following that I wanted to talk to everybody about.
Very intriguing. Very intriguing.
And thank you for listening to us. Please subscribe and rate us and leave a comment. It really, really helps with the discoverability. Like I've noticed, our audio only listens are much more than the YouTube ones. And I think it's linked to the amount of comments and likes, subscribes that we're getting on the podcast versus the video version. So if you want to see our pretty faces going forward, please give us some love on YouTube.
We have faces for radio, as they say.
Awesome. Thank you, Alex.
We'll talk next time.
Always.
Bye-bye.
Bye.